Hey, everybody. Welcome to the morning market briefing. It's Wednesday, December 7th, 2022. Got a birthday boy in the house. Tom, happy birthday.
Thanks, man. I don't feel a day under 40.
You don't look it either. Anything to celebrate? Any plans and do anything fun?
Man, I hope not. We had a nice late night baby barfing in the crib.
Nice.
So I hope just go home and go to bed.
I ordered you a gift, a cameo video. Shout out that I don't think in a million years you would guess who it's from, but it has not arrived. It's supposed to be done today, and we'll see what happens.
I've never successfully gotten a cameo to arrive on time.
Yeah,
it's pretty unreliable.
I've done it once, but I'm at this point 1 for 3 if yours doesn't show up.
So. Yeah, I tried to get a couple Alabama players for my brother's bachelor party, and they all just never responded to the request, and so never did it.
Yeah, I actually tried and failed with an Alabama player as well. It was actually right after the Tennessee game. A buddy of mine who's a Bama fan tore his ACL, so I tried to get Will Reichard, the kicker, to say, like, cheer up, Sammy. You know, we all have trouble with our legs sometimes. No. And it said it was approved, and then he just didn't do it. So I got refunded. But I don't know. People don't like to have fun, I guess. Raphael Warnock defeated Herschel Walker. Tight race yesterday, maybe a little tighter than some expected. You know, I don't know. People were, I think, pretty fatigued. I always enjoy the last couple days after the election where they have not yet quite realized to cut the ads. I don't know how that happens, but the programming just kind of keeps doing them. And we're pretty much there, though. We should be done with some of the commercials for a while. The Senate was always, with Kamala Harris, at least in this round, was always going to be having a situation where at a minimum she was breaking the tie. But this does extend the control. It lessens the leverage that Joe Manchin can exert as a more conservative Democrat. But I think this is not an upset in the sense that it doesn't really shift the paradigm. You know, had Herschel won, we would have been exactly where we were with a 50-50 split. Manchin would have had some leverage, but not necessarily a surprise. Voting numbers, the turnout was actually better than I would have thought. That's kind of my only takeaway.
Yeah, I saw, and I can't confirm this outside of a tweet, but I saw that there are more people who voted in the state of Georgia yesterday for this race than voted for the 2020 presidential election.
Wow.
Which just goes to show just how restrictive those voting laws are that you can't put into place.
It's so hard. Well, I know Ben went to vote and there was an accident on 75. So I think he's going to sue the state of Georgia for voter suppression, and we'll keep you guys updated on that. Meta continuing to struggle, down 7% yesterday, getting more from privacy regulators. The European Union ruled that Meta shouldn't require users to agree to personalize ads based on their online activity. Essentially, this would mean that Meta can't use their Facebook or Instagram or WhatsApp data as a way to understand and feed them ads, which is pretty crucial to their business model. Could limit the data that Meta can access. The decision will be appealed, although I feel like in most of these cases, when a governing body or agency comes through and says, hey, you can't do this, pretty rare that they walk them back in this climate.
I mean, what you've got to do is then appeal to that same governing body. So good luck with that.
Yeah. We also got a new defense budget. We're going to increase the national security budget to $857.9 billion. This is pretty significantly above what expectations had been. I always wonder on defense budget expectations, how much effort is really put into that and how much they just talk to a lobbyist or someone that's involved in the congressional budget office and say, okay, here's what the number is going to be. Biden had asked for $812 billion. Again, we came in at basically $858. Last year, the budget was $778 billion, an 11% increase. I guess from my view, I'm not going to sit here and argue that the defense budget should be that big, that it should be smaller, any of those things. If you told me last year the budget was $778 billion, and you told me that we were spending tons of money and sending aid and materials to a war in Europe, and you told me inflation is where inflation is, an 11% increase doesn't seem like actually all that big of a move.
It really isn't. I mean, I'd be super interested to know what the total all-in number we've sent to Ukraine is since the start of this war, because I would guess that it's probably over $100 billion.
It's crazy.
So it's got to be, like, is that included in this number? My guess would probably say it's not.
Probably not.
So
it's probably a foreign aid.
Yeah, so I don't really know.
But there's probably pieces of it that
yeah. So I mean, you'd think it would be a lot higher, honestly, but I mean, I don't know.
Some of the initiatives in there, 7% increase, pay increase of only 4.6%, 2% housing allowance increase. So again, the high level headline number makes a lot of sense. 2% housing allowance increase really is not going to accomplish a whole lot in this market. We've talked a lot about housing. We'll actually talk a little more about housing here in a little bit, but that's not going to do a whole lot. There will be additional funding for new aircraft, ships, and vehicles. There's going to be some new employees for the State Department and intelligence agencies. I know everybody always loves that. New technology such as microelectronics and hypersonic weapons. Excited to hear that. There's a company that we know quite well here locally that's a startup. I don't even know how much we're supposed to say, but they're kind of working on some products for the hypersonic space. So that could be very favorable for them. $10 billion over 5 years to finance the sales of weaponry training and military equipment to Taiwan. And then, the removal of the COVID vaccine mandate. Legislation will have to go through the House, have to go through the Senate. I don't really see what bumps in the road this is going to hit. I mean, if there's one thing both sides of the aisle tend to agree on, it's that they like to spend money on the military.
I don't think it's going to hit a bump at all. So I just pulled, this is as of November 18th, 2022. So year to date, as of that date, we had sent $68 billion to Ukraine, and there's another $37.7 billion pending. So it's a grand total of $105.5 billion. So to increase it, by 80 billion, basically, top line for new defense budget, drop in the bucket, I'd say. I mean, we're spending more than that on another country's defense.
Yeah.
Doesn't seem like anyone's really going to raise a finger to fight this one.
Switching gears, we did hear from a number of individual companies, and we may come back to talk a little oil at the end of the call. We'll see what time it is. But Lowe's had an investor day. They reiterated their 2022 guidance, in which they expect revenue to be kind of right around $90 billion. They gave a range of 87 to 92. What's interesting there is the expectation had risen to 95.1 billion. So this implies growth of somewhere between a loss of 4% and up 2%, based on a market that is on the do-it-yourselfers as opposed to the professionals. That's where Lowe's really kind of has their distinct mix, I guess. The overall home remodeling and repair market is about 50-50, but they're more of a split to the individual, the person that's going to look up how to do something and try to do it themselves and break it before they hire somebody to come in and fix it. Operating margins expected to be between 13.3 and 13.9%, kind of on the high end of what everybody was looking for. It implies an earnings per share of somewhere between $13.50 and $14.75, which again just kind of hugs what the street estimate is. It does not seem to be concerning. It does seem like they're operating fairly well. They're seeing revenue that's not going to be as high as the street is looking for, but they're operating a little bit more efficiently despite that lower revenue number.
Yeah, I think this is an excellent bit of data on Lowe's. I mean, it looks like they're just operating really well. I mean, which is what you need to see. I mean, in a situation where you're seeing everyone say, hey, we're heading into a recession, there's going to be a recession next year, we might already be in a recession, to see numbers come in where efficiency is key, right? They've got lower store expenses. They've been managing inventory well. Their advertising expenses have come down. They've really put themselves in a position to be robust in an economy that's probably going to take it on the chin, especially in the housing market. If rates continue to maintain an elevated level and that slows down quite a bit, we're probably going to see a little bit of a crunch in the home improvement area. So I think this is really positive for Lowe's. I would hope that Home Depot is operating at a similar level.
Southwest also had an investor day. They reinstituted the dividend, which is probably the single biggest headline to come out of this. But they're pretty confident that they can increase capacity and improve operating leverage as a byproduct of that. Excuse me, man. Tough times here. We got Ben coming in hot, fresh out of the shower, still wet. We kicked him out of the room. He knocked over folders. I can't stop coughing. But Southwest, they're betting hard on increased demand for flight travel. And this would be the thing that I think you've got to look at. You look at Lowe's and you see really, really strong operations. You have to be impressed with that. What could hurt? Well, the do-it-yourself market is probably going to be pretty closely aligned with economic conditions. If inflation outpaces wage increases, there's less money to go around for home repairs. That could be a threat for them. Same with Southwest in a lot of ways. If travel takes a back seat relative to other necessities because inflation does not get under control and there's not discretionary money to go around, that could create a problem for them. So they're really banking on this being a shallow or possibly non-existent recession. I mean, that's really what their next 12 to 18 months depends on.
I mean, it's going to be interesting. I was looking at flights this week, trying to go down to the Orange Bowl in Miami. And if you look at flight prices, it's just absolutely insane. And so I think that's really what's going to be a major headwind for them, no pun intended, is that, I mean, just the absolute spiraling costs of flying. I mean, for context, looking to fly to Miami just to leave on a Friday morning, go to the game and come back Saturday afternoon, was over $1,000 per ticket. So we actually ended up flying into West Palm Beach, which I think it ended up being like $200 a ticket, which is just insanity. But, I was looking at Fort Myers, looking at flying out of Chattanooga. I mean, there's just no reasonable explanation for you're call it a month out looking to fly to a major hub from a major hub would to be $1,000 a ticket.
It's crazy.
So it's just, I think that's the major headwind we're seeing with airlines right now is the costs are just insane. And at a certain point, indefensible. That basically came down to we're either going to find a place to fly in and drive that's reasonable or we're not going to go at all.
Yeah. Yeah. People are having to make those decisions and the flights have just been, pretty wild. I flew to Minneapolis in October. It was like the most expensive domestic flight I've taken in years. It was so expensive. It wasn't like I was flying first class or anything. I was riding with the people on the big Airbus. And it was insane how expensive that was.
Yeah. I think it's just, I don't know how we get out of this. I don't know if it's just we need to figure out the supply demand dynamics. They need to get demand up enough that they can open up more routes. I'm not really sure what the solution is, but flying right now, it's just, it's like having teeth pulled.
Last thing for today, Toll Brothers, home builder, they build higher end homes, average sales price usually over $1 million. So a little bit different than KB and some of the others that we talk about more frequently on the show. But they reported really, really strong numbers. Their average home sales price, again, higher up. The read through there would be that the higher end home consumer is probably not being hit as much by the inflation narrative, and they're much less concerned about interest rates than the more standard, middle market home buyers. Demand has been very strong. Cancellation rates relatively low. Their margin guidance was down a little bit. The expectation for this year was 29%. They're saying, hey, moving forward, probably gonna be closer to 27. But that's better than what was previously given, which was 25.7. And historically, this is a company that does 22 to 25% margins. So they're still seeing some degree of pricing control, even over higher input costs. Just interesting to see a portion of the housing market where a company building more expensive homes is really not having any problem with this stuff.
Yeah. I think that we're starting to see the mosaic is starting to kind of shake out with what's going on in this economy, which is that people who have sort of that exit velocity level of money, they can afford to pay cash for $1 million home. They're not feeling any sort of squeeze. Interest rates are, if you don't have to have debt, interest rates don't bother you at all, right? Yep. You can pay cash for a house. Doesn't matter what the interest rates are. You can do whatever you want. I think it's that middle sort of white collar, tech job, middle manager, kind of you're making a lot of money, but you don't really do anything. You've got enough money that you can buy a nice house, but you can't buy the whole thing outright in cash. You're probably driving a car around that's too expensive and has a serious interest rate on it. We're seeing that's where the real squeeze is. And I think those are the people who have, checked down to Walmart where they're saying, hey, we're seeing people with making more than $100,000 a year shopping at Walmart. I think that's where the pain seems to be sort of in that middle upper class. On the lower end, it's just like, it is what it is. Things are probably about the same as they always are. If you're living paycheck to paycheck, you probably still are, but it's that middle part where we're seeing job losses. We're seeing the squeeze at the work, and we're seeing a squeeze on the wallet as well.
Yeah, I think it's interesting. I think there's this whole cross section of home buyers that bought homes, call it that 5 years ago, 4 years ago, 3 years ago, anywhere kind of in that window where they've seen massive appreciation in their home value, even at today's prices, which have come down a little bit, maybe from the all-time highs. Massive appreciation. They have tons of equity in there, but they really can't go anywhere. They're still relatively trapped. And I think of people in starter homes that they bought for, $250,000 that are now worth $400,000. In theory, you would say, hey, let's sell this and we could move into a $600,000 or $700,000 home. But the mortgage payment's so much higher with interest rates where they are. You have all this equity, but there's really not much you can do with it. You can't really cash out and refinance the house because your interest rate's going to go up. You're kind of stuck. I think people that are okay with where they are located are in a great spot. But those that want to move, I think they're having to put that on the back burner.
Yeah, definitely. I think that as we move out of the COVID thing, this could even be a potential narrative with the wage increases in remote work, which is that you kind of had that you could kind of live wherever you wanted, and that was helpful. But now it's like we're all going back to work. People are going back to the office, and people are going to try and increase their income by taking a job where they have to physically move. I think that the turnover in that area, in that arena, is going to slow down significantly, and that might actually help with wage inflation because you're not going to take a job that's going to pay you 20% more if you got to move into a house where you got to pay 40% more.
Yeah, it just doesn't check out. Cool. We'll wrap it up there. We'll be back tomorrow morning at 8:30. Hope you guys have a great day. Talk to you soon.